StockMiner.com studios here in the beautiful Black Hills of South Dakota. I'm your stockminer, Brian Johnson. And the markets wandered their way upwards today after starting, down ever so slightly. So we saw the bulls kind of try to do something with the day. It didn't really succeed all that well. The internals were flat yet again, second day in a row where we have not seen anything at all from the internals, telling me that there really is true parity here in the markets right now. Nobody's interested in moving it up. Nobody's interested in moving it down. And so here we go with the sideways consolidation. Truly showing us no indication of really which direction it wants to lend itself. However, this sideways motion is not necessarily, in this case, good for the bulls this time, as we have now run down and now we're sitting on lows. Looking at the Dow chart, you can see what I'm talking about. Hit the bottom, 12,350-ish area, and wander sideways, giving us no indication of whether it wants to try to move itself back up and the bulls take control again, or whether the bulls are just staying content down here, waiting for their next opportunity to drag this thing down. If we look over at the daily, you can see this is where the problem's coming in at, and that is the 50-day moving average. I talked about this for, last week and into the beginning of this week. And you can see that it's holding now very nicely. Now that we've seen, we're kind of on at around that 50-day on Monday, but you can see one clear close yesterday and then now another close today below that 50-day moving average. This lower area here broke through that support and is now holding very, very nicely as resistance so far. That does not play well for the bulls so far. You really need to clear this area up here and ultimately need to really clear these 20-day moving averages, and that's on all of the indices in order to see some real legs come back into this market. Those will be the areas you need to be watching coming into maybe not even the end of this week, but into next week if the bulls and the bears just decide to wander sideways here all week long. I would expect one more decent push one way or the other before we finally close this week out, but your areas to watch are still going to be up and over this 20 before I really kind of sink myself back into the bullish scenario. Right now, this does not look good for the bulls. They have done a very nice job of pulling this back in a very, very nice controlled manner. But really what we're seeing here is now a break and a stick below the 50-day moving average. We haven't seen that since back here in March. And we did get a lot of help in the markets pushing this thing back to the upside, and maybe that's going to happen here again. But you just have to respect what the chart is giving you, and that is nice holds below the 50. This could turn into a very well-defined low base formation, making things very bearish on all of the charts. NASDAQ, same scenario. Gap below what was here support, came back, retested it, held nicely yesterday, and now back to around where we started the week. So you can see after the big gap down, the market in true sideways fashion, wandering sideways and still holding beautifully to these lower 2300 areas. It's clearly marked on the chart and has been for a while. 2300 for me has been a really strong area of support and resistance for quite a while, going back many months actually. This is something I've really been watching closely myself. Today we got that gap down, and guess where? Right to and just about that 2300 mark, where then it jumped to the upside as the buyers decided to come in and the bulls decided to hold over and above this area. The NASDAQ weekly, another line of good strong support, sitting right on it now. So 2300 acting as a very good line on the daily, very good line on the weekly as well. This is where you got to be very, very cautious from a bull side. If you are bullish the NASDAQ, you need to be very careful. This thing breaks that 2300 mark and starts really heading its way down. This is where we really could see the acceleration come into play from the sellers. SPX 60 holding below this as well. Here's that gap down, the run back up and retest and hold. Run back up, retest and hold. It tried to break at the end of the day, and you can see it was a fake break. This is very interesting to me to see that the bears were able to drag that back down and hold, yet this same overhead, what was support, this overhead resistance area now, holding very, very nicely. This sideways action is still more of a low base type formation. And ultimately, where did it bounce from? Well, We have the opposite happening now. Retests of the 50 are now holding for the bears as opposed to holding from the bulls, which is what we saw back here. So the 50, once again, on all charts, making for a very, very strong area to control for both the bears and the bulls. So here we are, sideways action. If it stays down in this area, it is a low base formation, and that is better for the bears. Your best chance, if you really want to look to get more bullish on these markets, is wait for clears of the 20-day moving averages. VIX daily here, you can see the big gap up and ran straight back down. Complacency coming back into the market on Monday, staying sideways and falling out yet again today. The VIX cannot hold any of these upper levels. It is not at all interested in what we're seeing from the bear side quite yet. Has been a good move to the downside, but with this consolidation sideways, complacency is once again returning to the markets, and they're not quite and not near as spooked as they were over the weekend, and more importantly into Monday's trading. Here hitting the 50 and driving itself back down into the 17, which is well within my green meter, if you will, for complacency in the markets. 1920ish, that hits my yellow zone. That's really where I start to get interested in bigger bear moves, but right now just nothing to really worry about, nothing to even talk about. Apple 60-minute was up almost 1.5% today as it managed to creep its way back into these upper levels. Here we were back on Monday, beautiful gap down into 330, run up, pull back, and now another run up. So Apple doing very well, but not yet back to these 340-ish areas, which is what we really want to keep our eye on from the daily. As you can see, we have at 341 the 50, and at 340, basically 343, the 20. Big area of overhead resistance right now for Apple. We saw the run sideways, the drop below both of them, not just one, but both of them in one day. On retests, it's held. So going to be watching that closely. Your breaks are back above those areas on any kind of bullishness, or if you want to get bullish at all in Apple. Otherwise, to the lower side, that 330 mark is definitely one for the bears to be watching for as Apple kind of tries to figure out its direction in the end of the week. It's going to be some tough trading. I would expect it to maybe finish somewhere, these moving averages, I don't know if they'll be broke this week. In that 330 area, I'm not sure that'll be broke either, not based on what we've seen so far. But those are your bigger areas to be watching in Apple. The weekly side of it, that 343 area again, the 20-week moving average. Once again, bulls are absolutely going to want to try to take that back, but now that we've been away from it for so long, it will be very interesting to see if the bears don't actually hold that on any kind of a retest on the weekly of Apple. FAS sideways, looking just like the markets. This is giving us nothing to work off of. We had a really nice move here where it gapped down, stuck to the blue line, moved sideways, moved down, stuck to the blue line, moved sideways. We're up just a little bit, and you can see that breaks the 200-day moving average, which was one of my potential trades to the downside. I said be very careful, don't let it, make sure it's going to stick, and watch carefully for maybe some sort of a hammer type candle being put in. We almost got that. It was very close to what I would have expected to see. And here on the on today's candle, you see us coming back to retest after we closed below the 200 yesterday, back to retest it today. And guess what? Even though we were able to slice through it, we were not able to break through it. We closed yet again back below that 200-day moving average. So still seeing quite a bit of work to be done yet by the bulls in all of the markets. This is the financials here that we're looking at. FAZ then gapped up and into this overhead area. We did see a little bit of a break, only to come back into this really nice, well-defined channel. Be watching this in your trading. If you don't have it marked in, make sure you get it in. Going right to the daily, this is what I talked about. Remember, I said we still had a little bit of room to go on Monday. I said we've still got a little bit of room to go. I'd be watching that 45.50 to 46 area very closely. Today we had a high of 45.95. So that 45.50 to 46 area playing out perfectly right now. That is your overhead area. It's holding very nicely. Loved what I saw there on Monday. Told you guys if you were long to stick with it. Then well, I said on Monday that if you are in this thing to the long side and are still holding, might as well stick with it. But be looking for these overhead areas to hold. So far, so good. Your next entry on this won't be until just above 46ish or so to the long side. That would be a very, very strong move, especially if it would actually not only move above it, but then eventually close above it for the day. That would be a good, strong move by the bulls. And I'd almost guess that's going to coincide with some sort of drop in the markets because the financials will certainly drop on any kind of movement as such. So there's something else to be watching here. I really like how well defined this move is by the FAZ. So if you like to play FAS and FAZ, I just recommend you look at this, watch this very closely. We are at very strong overhead resistance as would be expected in this area, but breaks up and over that can make for a decent long. Otherwise, let's see if we don't come back into maybe that 43 area at least, if not down into the 41, 42 area on FAZ if the bulls return to the markets. All right, that does it for your Wednesday video. Lots of choppy action, not a whole lot going on right here, but good time to talk about the fact that my newsletter is out every day. If you like what you get in the daily videos, try out the newsletter. It comes out every day except Saturday. It's probably 15 to 20 minutes in length every day where I talk about a lot more indices. We talk about the Russells, we talk about gold, talk about oil, talk about the dollar. I discuss whatever picks I have on for that week on the stock side of things. We discuss more exact entries. A lot of times in my daily I'll tell you, above this level or below that level, whereas for the subscribers I'm giving more precise entries with them. So if you enjoy the dailies, you'll love the subscriber videos. And if you need, maybe you don't need a lot of help in your trading, but you wouldn't mind a second opinion on things, the newsletter is definitely the way to go. It will give you that, and it'll help you with entries and ideas. And if you already have entries and exits picked out, this could be a good validation for you. All right, guys, we will see you again, as always, on Friday.